Hello and welcome back. In today's session, we would be discussing physical investments. When it comes to physical investments, there are many options available. However, our discussion in today's session would revolve around two popular avenues of physical investing, and that is real estate and gold. Gold is a precious metal that has a special place in all our hearts. Who doesn't like gold? From owning gold jewelry to having gold bars or coins in the safety deposit bag, there is something about gold which makes us feel secure. When it comes to the yellow metal, there are a lot of interesting things to know. Gold has been used since ancient times for making jewelry and coins. Its supply was limited due to hardship of digging out the underground reserves, which led to its high value, thus earning little of precious metal. It was used for trade and stored as wealth. However, over the period of time, slowly paper currencies and coins made of less precious metals replaced gold. However, gold did not lose its popularity. People still love gold and consider it a mode to store their wealth. Now, when it comes to demand for gold, gold not only has financial value, but it has deep emotional and cultural values attached to it. People of different countries accumulate gold for different reasons, which are strongly influenced by economic, social, and cultural factors. For example, in India and China, the bride is given a significant amount of gold jewelry as a part of their wedding gift. The primary sources of demand for gold comes from jewelry manufacturing. Second, as an investment option. Third, demand from central banks. And the fourth is something which is very interesting: technology and innovation. Yes, gold is an integral part for various innovations such as in electronic goods, dentistry, purifying waters, and others. Hence, gold has significant industrial demand also. According to the World Gold Council, the total gold reserve is around 31,695 tons. Now, this data is as on 2021, out of which more than 75% is owned only by 10 countries. So that is something which is quite interesting. And definitely you'd be curious to know which are these 10 countries in the world who has who owns 75%. Well, the list includes at number one position it is United States, Germany, Italy, France, Russia, China, Switzerland, Japan. Of course, India is also there in this list at rank 9. And the last country which is part of those 10 countries which owns 75% of gold includes Netherlands. So out of these 10 countries, India is in the ninth position. Now, you might ask me a question why gold is so valuable, and I'm sure you're also aware of some of the points that substantiate this statement as why gold is popular. First, it has historic, cultural, and emotional value. Second, it is difficult to mine. Hence, although it is available in plenty, the supply is limited. It is demanded by different people for different reasons. It has economic significance, and the value of US dollar is linked to gold reserves and prices. So these are some of the five reasons which I've outlined that makes gold so valuable, right? Now let us also examine gold as an avenue of investment, right? So what are the advantages and disadvantages of investing in gold? Let's first identify some of the advantages. The first one being is that gold is an eternal metal. There is a strong demand for gold across the globe. The second advantage is that gold is an ideal for bringing diversity in a portfolio. So, portfolio means a collection of different investments. And there is a saying which I'm sure you would have heard of, that do not put all the eggs in the same basket, which means you should not invest your money in the same asset class. So, therefore, one of the best way is to diversify is to invest in different asset classes. And gold is also one of the asset class. The third advantage is that gold provides significant hedging opportunities against financial and economic risks. The fourth point is that gold is a liquid investment. It can be bought and sold anytime you want. So definitely one of the assets that has good amount of liquidity attached to it. Now let's point out the disadvantages. Buying physical gold brings in problem of storage. One may incur additional costs storing the gold and keeping it safe. Gold prices can be volatile in short run. One may have to pay brokerage fees while purchasing gold, electronic traded funds, and shares on the stock exchanges. And it has been observed that when stock market goes up, gold prices go down. So there is an inverse relationship between stock market and gold prices. Some investors panic when this happens. However, gold price finally settle down. Hence, being patient is important when you especially invest in gold. Now, let us also discuss what are the means and ways through which you can invest in gold, because most of us have a perception that when we say invest in gold, we have to buy gold jewelry. But that's not the case. There are many other ways of investing in gold. So let us examine these options. Today, an investor has a world of options for investing in gold, and let us discuss some of the common options. The first option is obviously buying physical gold. Commonly known as gold bullion, one can purchase physical gold in variety of forms. This includes jewelry, coins, bars, and other forms. Gold can be bought from a jeweler, a bank, or any authorized dealer. This is the most popular form of investing in gold across the world. However, buying physical gold is quite inconvenient since the initial investment can be quite high, because one has to buy at least 1 gram of gold and investor has to arrange for its storage and safety. So a disadvantage here may be that you have to incur extra cost of storage and insurance. An advantage is that you directly own the gold. The second option to invest in gold is through gold exchange traded funds, popularly known as gold ETFs. And gold ETFs are popular and cost effective methods of investing in gold. Electronic traded funds are funds which represent the price of an underlying asset. In this case, it is the gold. They are bought and sold in a stock exchange like BSE and NSE, and can be purchased with a relatively low investment. Over the last few years, gold ETFs have become a popular form of investment, mainly due to the ease of buying and selling. In India, there are many gold ETFs which have significant returns to investors. So, what happens in a ETF, electronic traded fund? You get to buy the underlying value, not the actual gold. So, this underlying value is sold in the form of units. So, it is kind of a mutual fund, but the underlying asset here is gold. Now, what is the advantage? It is convenient, no need to visit a store to buy or sell. The only disadvantage is that the investor is not the direct owner of the gold, because the gold is held by the company that manages the fund. And in most cases, it is the underlying value of the gold, not the actual gold. A third option is called gold futures and option. So these gold futures and options are a complicated uh, derivative instruments in which the trading happens on the underlying value of the gold. So you get to buy and sell gold, not the actual physical gold, but in the form of a derivative instrument which derives its value from the value of the gold. So this is also one of the most popular option. Investing in gold futures and options derivatives require more understanding than investing in physical gold or ETF, and hence it is usually done by the experts. And India also, you have commodity exchanges like MCX, Multi Commodity Exchange, that offers gold futures and options. So you require a lot of insights to do trading in gold futures and options. And another easy way out probably can be investing in the shares of gold mining companies. So that's another great way of investing in gold, in purchasing the shares of gold mining companies. So these work as normal share investment. An investor can make a profit when the share price goes up. Like all other companies, mining companies can also declare dividend, which can be additional source of income to the investors. And there are quite a few mining companies that are listed on the stock exchanges, right? And if you want a more secure way of investing in gold, then other option is sovereign gold bonds. These are paper gold bonds issued by Reserve Bank of India on behalf of the government of India. They were first launched in 2015 as an alternative to investing in physical gold and a method to encourage people to inculcate the habit of investing. So once issued, these bonds are available in the secondary market for buying and selling. Sovereign Gold Bond 2020-21 series was open for investment during October 2020, and the issue price was between 5,000, around 5,000 for online investment. So an investor could buy a minimum 1 gram of gold to maximum 4 kg, and the interest rate is 2.50%. So this is these are in fact some of the ways through which you can invest in gold. Now let's also discuss real estate. So real estate has its own challenges. It's not an easy investment for a common man. So I would rather say a smart investment has the potential to change our lives, providing us sufficient funds to live our dreams. Today, most of us have an investment portfolio comprising of number of investments. People invest in stock, gold, bonds, government scheme. But one of the most underrated or ignored investment in the recent times remains to be the real estate. And of course, real estate investment requires huge amount of investment, and that's the reason why it has remained out of reach for many investors, especially small time investors. But given the huge economic boom in most Indian cities, the average income has increased, providing us added incentives to invest for the future, and real estate could be the ideal investment choice for you, right? So I want to identify some of the important points that needs to be evaluated, considered before investing in real estate. As I said, that real estate has a lot of challenges. It is possible for someone who has no prior real estate experience to get carried away and get lured by the kind of profit what real estate offers, right? But real estate investment comes with certain risk, and beginners should probably consider these points before they could put their hard-earned money into any kind of real estate. So first point is that to stay patient. Buying a property is a time consuming affair, which most genuine property transaction taking a few days to complete. While number of real estate companies offer to complete formalities overnight, the fact remains that exhibiting patience can help you land a good deal. Jumping the gun can see you pay more for the property or purchase one which does not live up to your expectation. And sellers can delay projects which could see your investment not offering any returns for a certain period. So you need to be patient and not hurry up whenever you're trying to buy a land or a flat or a house. And most importantly, you need to research the property. So doing your homework before you step out to look out for a property is very critical. With a number of projects coming up, it can be confusing to choose the right real estate. For sellers are typical known for sweet talking buyers. The amenities on the offer, the history of construction company, the material used, the area of the property in which it is located. Uh, so failing to research before buying could see you regret later. So negating your investment. So this is something which you need to check. And in fact, the next point is also equally important to check the documents, check the papers. The papers of a property are perhaps the most important factor one should consider, for it is possible for someone who is not acquainted with real estate industry to get scammed into buying a property with fake papers. So buying a property without clear titles can lead to long drawn court cases and litigations, which essentially nullifies your investment. So all property papers should be checked by the legal experts to authenticate them. For failure to do this could see you purchasing a property which could be mired in controversy. A number of times people sell properties below market rate, which should alert you. For such properties could have litigation or internal issue within the owner. So documentation check is something which you should not compromise. And check the market rates. Most local government provide you a guidance value to help investor the rate of the property. So knowing the market rate can help you track the local trends, ensuring that you don't get scammed into by paying a higher amount than what the property deserves. So researching market rates and working out the developments could help you extrapolate the returns you could expect in the future. And the best way and the most simplest way of doing some sort of a cross check and examination is to talk to the neighbors. Talking to the neighbors is a good idea, which most of us tend to ignore. This can help you to get a first hand perspective of how things are in the locality, helping you to narrow down any problems or areas which can dilute an investment. Talking to them can also help you to know the current market rates, see the area has developed, the scope of future development. Given the fact that the neighbors aren't salesmen trying to sell you the property, one can get a clear picture of real estate they tend to buy. So neighbors can really help you. The conversation can definitely provide you some very good insights, which otherwise you will not get it from the company which is trying to sell you or from the brokers. And calculate your finances. It is important that you calculate your finances you have in order to ensure that you meet a certain goals. While it is easy to get loans from the bank, calculating the interest and other factors is also very important. And also consider the risk factor. Real estate investments are typically safer than other investment, but that doesn't mean that they are totally risk free. Legal hurdles and property disputes are extremely common in India. One should not ensure that the property they are interested is clear and minus the hassles. Negotiation is also important. Negotiations are a key aspect of Indian real estate system, as everyone is looking for a deal which definitely can make them rich. Knowing the art how to negotiate bargain with the seller can help you save a lot of money and get additional probably freebies, right? Like parking space, furniture, and all that. So, therefore, owning a property can be the smartest move given the changing dynamics of our times, and keeping these simple points in mind can point a beginner towards the right path to investing in real estate. So, these are the inputs which we have to keep in mind before we could buy a real estate property. So, with this, we will end our today's session. I hope you have now some idea how to invest in physical investments like gold and real estate. So, next time when we meet, we will start with a new topic. Goodbye.